Greetings, tax tip lovers, and welcome to this week's top 5 tax fixes in just 5 minutes. Come gather round people to ponder the IHT and CGT reviews by the Office of Tax Simplification and how it might impact property owners and landlords like you. The government has borrowed more than 300 billion and that has to be repaid. With interest rates and long-dated gilts low right now, servicing the debt's not such a problem, but they need £50 billion more each decade. And there's one obvious way to do that: increase taxes, not R. Short term, the focus is likely to be on taxes that don't impact expenditure and spending capability, and we had 2 big clues as to what may happen. Last year, the Office of Tax Simplification published its IHT report, which, if acted upon, will affect individuals. The Chancellor has just requested an urgent review of CGT and chargeable gains in relation to individuals and small businesses. Cue civil faulty and the bleeding obvious. So if you're an individual or a small business, then you're in the firing line, and CGT and IHT will always be issues for property investors and landlords. Well, as the Beatles warned us back in the year that England won the World Cup, should 5% appear too small, be thankful I don't take it all, because I'm the taxman. Okay, here we go. Let's show the thirsty horse where to get some H2O on the top 5 tax review considerations. Static at this week's number 5 is, if you drive a car, I'll tax the street. Can't help but feel that the existing low rates of CGT are likely to be raised, possibly to match those of income tax. Maybe there'll be some relinking of CGT rates to income tax rates. Separate regimes are likely to remain, but the rate, 10% or 20% and 28% on residential property, is roughly half the rates of income tax at 20% or 40% or even 45%. So doubling the rate of CGT is easy and, in my view, likely. Both the Labour Party and the Lib Dems had that in their election manifestos, so politically it may play well. Down at this week's number 4 is, if you try to sit, I'll tax your seat. Currently, where a person inherits an asset, it's rebased at the date of death for CGT purposes, so it's inherited at market value, which is known as capital gains uplift. If it's subsequently sold, there's no CGT to pay. The theme of the IHT report is the unification of the treatment of assets for CGT and IHT, and it proposes scrapping the capital gains uplift on death and replacing it with no gain, no loss, which means that the person inheriting the asset takes on the base cost of the person who left it to them. So a big, big difference, particularly for property. Just inside this week's top 3 is a classic called, if you get too cold, I'll tax the heat. We already have precedent for this model with business-related capital gains. Last year, entrepreneurial relief was reviewed and the lifetime threshold was reduced from £10 million down to £1 million. So it wasn't taken away, which may have been politically sensitive. Instead, it was reduced to a level where it's close to useless. The new entry at this week's number 2 is, if you take a walk, I'll tax your feet. What about the wealth tax? Very difficult. Dropped by lots of countries, only about 4 left, and in Belgium, it's just a property tax. Easiest might be council tax by re-rating and using current rather than 1991 values. A mansion tax with valuations every year, and how to collect the tax. Typically, people have assets but not cash, and it'll likely encourage tax avoidance. Perhaps not natural for a Conservative government. Staying at number 1 is the all-time classic, 'cause I'm the taxman. Okay, so the government has a £300 billion hole in its finances caused by the pandemic. There was an IHT review last year, and an urgent review of CGT is taking place right now, and there's an autumn budget just a few weeks away. Cue Civil 40. Something's about to change, and it's not for the better. You may have just a few short weeks to sort your CGT and IHT plan. No guarantees it'll work or endure, but it's got to be worth getting your ducks in a line, and right now. Okay, tax tippers, that's it. And as George Harrison wrote, I'm the tax man and you're working for no one but me. So it's time to take action, and here's how. You can do nothing and stay in the exact same place and pay a shed load of tax unnecessarily, or you can follow the link above for a free power hour review with property tax experts who are ex-PwC and ex-HMRC, and will make your property tax planning like it was our own. And that's our take on the IHT and CGT reviews and why we believe you need to take action, tax tippers. All right, stay bright. Catch you again for breakfast next Sunday. Ta-ra.